Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a regular guest and a forensic macroeconomic analyst. He runs Kirby Analytics. I'm talking about Rob Kirby. Rob Kirby, thank you for joining us today on USAWatchdog.com.
Pleasure to be with you again, Greg.
I want to talk to you about gold because I know you arrange tonnage. One of the things you do in your livelihood is you arrange tonnage for big clients globally. And in the pre-interview, you said, I believe the worm has turned for the gold market. Would you please explain that to us?
Yeah, what I see coming in the very, very near future is going to be the marriage of the cryptocurrencies with the physical precious metals, which I feel, Greg, is going to bring a high degree of integrity to the ownership and transmission of physical precious metals of the likes that we've never seen before. So we're going to have some honest trade in the precious metals arena, and I believe that the creation of these honest means to convey ownership of precious metals is going to usurp the dominant fraudulent paper schemes that are currently perpetrated on the COMEX exchange and the LBMA in London, which is the London Bullion Market Exchange.
And if this kind of cuts them out, I mean, they are freaking out over this, are they not? I mean, and it looks like it's unstoppable, or is it?
Yeah, no, officialdom is very, very concerned and very upset with the rapid spinning up of the cryptocurrency marketplace. And, you know, the cryptocurrency marketplace is no panacea, and I don't want anyone to think that I'm presenting it as such. But what the blockchain technology, and when people speak of cryptocurrencies, what they're really referring to is blockchain technology. And blockchain brings integrity and brings transparency to the transmission of ownership of things. Or at least let's just say it has that capability. And that's not to say that every cryptocurrency that comes along is created by honorable people or is going to be something that stands for a long time. I would liken that the crypto world is today much like the internet and let's just say e-commerce in 1996, 7, 8, or 9. And I mean, the comparison between the internet in 96 to 99 versus what the internet is today and what e-commerce is today is night and day. The difference between how cryptocurrencies are held and how they're used and who holds them today versus where they'll be in 5, 6, 7 years, I think is going to be a dramatic and transformative change. And I do see the marriage of metals to these cryptocurrencies formats utilizing the blockchain, which is going to bring integrity to metals. Blockchain technology prevents fraud, prevents redundancies, lowers costs, produces a documented chain of ownership to anything that is lodged on the blockchain. And what this does is it makes transmission look, it takes away all the fat that feeds, let's just say, the globalist deep state. And this is why they're so concerned about the rapid development and evolving crypto world, because it does offer a degree of let's just say sincerity that our current fiat money regime doesn't.
They're worried. The deep state's actually worried about this. This will make them lose power.
Yeah, because what it does is it brings integrity to money. You know, in today's world, Greg, something that we touched on pre-interview, we were talking about the number of dollars there are in the world, and the real upshot of when you start talking about the number of dollars there are in the world, nobody really knows. And I would suggest to you that the real quantity of dollars in the world is much greater than anyone imagines.
What would
It's
you?
just a lot of these dollars are dark, and they're held in the bowels of institutions like the Exchange Stabilization Fund. So the world may be cruising along thinking that the total number of dollars in the world is X, but the true amount of dollars in the world, if you count the dark ones, it might be 3 or 4X, which really means that the money supply is much bigger than anyone understands or believes.
And I was one of the Zero Hedge articles. I love them. They have good articles. They have good titles. Anyway, one of the articles, I want to give them credit too. They said that their articles wasn't. They summed up the whole article in a just a quick headline, and that was Bitcoin. People are not long. The genesis of this, or the basic idea of this, people are not long Bitcoin. They're short government. Just like what Martin Armstrong says about gold, it's you don't buy gold for inflation. You buy gold when you fear the government. When you fear the government's not going to handle it. It's not long a Bitcoin, but short government. Would you explain that a little more for us?
Well, sure. The ownership of cryptocurrencies and the rise of the market cap of the cryptocurrency space. I've been espousing this view for quite some time. It's an anti-dollar trade. People who are holding dollars, who want to lighten up on their dollar holdings, who are looking for diversification, traditionally and historically, they would go to precious metals, gold and or silver. But manipulation that has kept these things under pressure, at least the paper pricing of them, has basically made people seek out alternatives. And the alternative that the world seems to have settled on for the time being anyway has been these cryptocurrencies, which with the supporting blockchain technology, they at least have integrity from the standpoint that people know how many of them are in existence, and they're in finite amount, and they're easily transferred at a very low cost, and they maintain their integrity because there's a documented history of ownership. So there's no issues with title. There's no issues with you can't be defrauded out of your Bitcoin unless, of course, you have it housed on an exchange that's operated by crooks. But I mean, if you hold your Bitcoin or your cryptocurrency in a secure wallet, you can't have it stolen from you.
And when you talk about ownership, I mean, I just want to touch on this. I mean, this is like if Bitcoin was in the gold market, you'd have, I don't know, 500 basically demands on each Bitcoin, or 500 people think that they own each Bitcoin or whatever. I don't know what the leverage was. And at one point, it was 3 or 4 or 500 in COMEX, or 500 people thinking they own the same ounce of gold. And they also that they had no idea if the bars were real, if the gold was real, if they weren't tungsten bars, if they could counterfeit gold and short the market in the future. This is all the things you're talking about that Bitcoin bypasses. This is what happens in. I mean, you think there would be some, the SEC or the CFTC is regulating that. They're not. They got their eyes closed watching porn in the office, like at the SEC is over there.
Well, they've got their eyes closed to the manipulation in the precious metals. We know that because how anybody can justify the fact that for every physical ounce of precious metal that exists in nature, it gets sold, many hundreds of times over in paper form on the exchanges, whether it's the COMEX or the LBMA or one of the exchanges in Tokyo or one of the exchanges in China. So with a cryptocurrency, and you only reference Bitcoin, but it doesn't necessarily. You can insert any cryptocurrency in place of Bitcoin, but to sell a Bitcoin you must possess a Bitcoin. If you have one Bitcoin, you cannot sell 500 of them. Plain and simple. And that goes for JP Morgan or Morgan Stanley or Goldman Sachs or Citibank. They can only sell Bitcoin that they own. But in the gold market, they can sell all the gold they want. They can sell gold that doesn't exist, that will never be mined.
which suppresses the price. So tell me how the price of gold. Incidentally, you have a new article coming out, and I'll link to your site at the end called "Cryptos Are Coming." What you talked about is some of what is in the article. Is you were reading? I basically got access to the article by you, and it's fascinating what you're talking about. How cryptocurrencies are going to knock the dollar out of the world reserve status. I mean, that's what's coming, right? I mean, the cryptos are going to, in some way, shape, or form, are going to basically kibosh the whole dollar global standard, right?
Absolutely, because what the cryptos offer that the dollar doesn't is decentralization, and it's the centralized U.S. fiat dollar that and the dollar standard that requires everybody in the world who wants to buy commodities in the international markets must first purchase U.S. dollars before they can make that purchase. Cryptocurrencies bypass the dollar and allow for transmission of ownership on a very rapid, cost-effective manner. And what they do is they bypass the dollar completely.
And the SWIFT system, they bypass the whole system.
Exactly. And what this really means at the end of the day is that countries will need fewer, and as the adoption of the cryptos and the uptake accelerates, people will require, and countries will require, less and less dollars in their reserve accounts to purchase the goods they want and need in the international marketplace, because they're going to be holding cryptocurrencies in lieu of or instead of dollars. And and what happens when people don't need dollars anymore? The dollars return home. They come back to America, and they'll be looking to purchase anything that they can get for them, and which ultimately means inflation will come to America.
A big inflation. You're talking about if you have dark dollars. I mean, they're talking about Bitcoin being 500,000, and by what you're saying that you don't know how many dollars are even out there. They're dark dollars.
Yeah.
I mean, there could be who knows how many dollars. 10 times, 100 times what people think. 1,000.
Well, maybe not 1,000. I mean, I just believe and I think you can make a very sound argument that there's many, 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 many more dollars in existence than what popular myth would have us believe. When the Federal Reserve posts on the Fed St. Louis site monetary aggregates, they're not counting the dark dollars that are held in the Exchange Stabilization Fund at the U.S. Treasury, and so basically their monetary aggregate data, in my view anyway, it's erroneous, because there's more dollars in existence than anybody's counting, and this is what allows. By the way, Greg, this is what allows for the U.S. Treasury to never ever have a failed bond auction when they auction off their bonds at their regular refinancings. I find it completely and utterly amazing in the industrialized world. I look at countries like Germany, and I have a background in the bond market. And like Germany has had failed bond auctions in their history, and the German currency, even when it was the mark standalone, was a very, very, very strong and very creditworthy currency. But in their history, they had failed bond auctions on occasion.
And when you say failed, you mean nobody bought their bonds. They say, here's what we're going to put a bond out for 3% or 4%. And everybody went, yeah, no, we don't want that.
Let me give you an example. A failed bond auction is when, let's just say they wanted to issue or sell 3 billion 7-year bonds, but they only had $2.2 billion worth of bids. So they didn't have enough bids for their the amount they wanted to sell to get the auction done. That's called a failed auction. America in their history has never had a failed auction. And the notion that America's never had a failed auction, to me, is absolutely and utterly preposterous. Because that's like saying if you accept the notion that America's never had a failed bond auction, then I think you would also be jiggy with the notion that somebody could, in the major leagues, could bat 1,000.
Oh, yeah. So in other words, you're saying it's rigged, that they don't have a failed auction because the
No,
exchange
reason,
table.
Greg, they don't have failed auctions because they have the Exchange Stabilization Fund that backs every auction as a backstop. They're always there in the background. And they don't announce themselves as the Exchange Stabilization Fund buying bonds if they're called upon to do so. They create a fake account in the Bahamas or in Bermuda or in Ireland, and they do the buying through these dark places and these shadowy accounts, and this way America never has a failed auction, and this way the American dollar looks like it's strong like an ape, and they beat their chest and they say that our currency is wonderful and our dollar and our bond market is deep. And they actually point to the fact that they've never had a failed bond auction, as how robust the market is for U.S. government debt. Well, I don't buy that for a minute. Just like I wouldn't buy it either, Greg, if some baseball player told me he batted 1,000 for a season.
And can tie this into how you were saying in the in the pre-interview, you said I think this is unraveling right now. Right now, I think it's unraveling. How does this unraveling of the world's reserve currency, the dollar, and the Treasury complex affect? How does it unravel, and how does it affect gold and silver?
Because tangible assets are migrating to the blockchain. And when tangible assets migrate to the blockchain, they bring with them, and they bring to that trade integrity, the inability for people to sell things more than once. They cut the waste and eliminate fraud and redundancy. And these are all the things that feed the deep state, the globalist deep state.
So in other words, you can buy gold and you could pay with your Bitcoin. And and then somebody will end up executing that trade for your Bitcoin without the exchange, and you will actually get physical gold or wheat or oil or silver or bauxite or aluminum or whatever. You will get a physical asset. Is that what you're telling me?
Yeah, you will in short order, Greg, be able to buy metal on the blockchain that will have integrity, that you will know is backed by physical metal in a vault somewhere. And this is what's coming. And not just to the precious metals, but it happens to work particularly well and be very favorable extension of blockchain technology into, it really comes back to the very nature of blockchain technology. It brings integrity and it brings honesty to the transmission of things. And when you bring honesty and integrity to the transmission of the ownership of precious metals, things like COMEX and LBMA have to go away because these things are built on fraudulent practices.
Well, I would say the Chicago Board of Trade or the what do they call it now, the Mercantile Exchange up there in Chicago. That's going to go poof too, unless they start accepting Bitcoin.
Well, ultimately, I think their days are numbered. That's my view.
Because they're much like we leave that out, but they give discounts, volume discounts for buying things for central banks to buy commodities. And why would they do that? I mean, why are central banks getting discounts to buy wheat or soybeans or?
Right. Just think about this.
Right.
Central banks, and particularly the Fed, but central banks the world over claim that they don't manipulate the precious metals markets, but yet the Chicago Board of Exchange, they give volume discount and enticements to central banks to actually trade their futures with them.
It's outrageous. I mean, what? That's outrageous. That's only to suppress the price.
Right. So explain to me, Greg, how is it that central banks are getting volume discounts and inducements to trade, metals futures with them when they claim that they're basically not trading them? We know they trade.
And they do it so their currency doesn't look bad. I mean, that's what they're doing. They're fighting inflation by, destroying the people that produce things.
They're giving people the appearance that fiat money is sound by depressing the value of precious metal, because precious metal historically is the go-to asset in the face of currency debasement. The currency is being debased in front of our eyes. And by holding the price of precious metals down, it's basically a cheap parlor trick, which has fooled an awful lot of people for a very long time.
But that's going to come to an end, though.
This will come to an end, and for the reason stated, there is a more honest and transparent way and a cheaper way to trade these things coming in short order.
And a lot of people have asked me, should I go out and buy Bitcoin? I mean, I don't know, it's 4,000 or 4,500. I don't know where it changes. It changes by hundreds of dollars in a day. But I just look at gold at 1,300 and silver at $17, $18. Plus a commission, I guess, if you buy an Eagle. I just think that this looks cheap to me, but I'm not an expert. What would you tell people to do?
Well, I mean, I am leery. I'm leery of Bitcoin. I own a little bit of Bitcoin, and I mean, not enough that it's ever going to make me rich, and not enough that it's ever going to make me poor if it goes to zero. And to be honest with you, the reason I bought a very little bit of Bitcoin was because I wanted to know how it worked, and I wanted to know how you buy it, because I was curious. But I mean, Bitcoin is really backed by nothing tangible. My feeling, and where I do believe that the blockchain technology and the crypto applications are going to be most strongly felt, is going to be in the blockchain or cryptoization of tangible things. And
they will become, in other words, they will become the market. They will become the Chicago Board of Trade. They will become the LBMA. They will become the COMEX. I mean, those are going to be antiquated systems.
My feeling is they will displace these institutions that you just mentioned. Not become. They will displace them.
Got it. And so would you tell people just to go out and buy? It's go to your coin store or whatever and buy yourself just gold and silver. Apparently it looks like it's still cheap to me, relative to the huge increase in Bitcoin. And I will tell you, I got to give you credit. At the beginning of the year, you were saying, hey, the Bitcoin has taken off, and other cryptocurrencies, you named several, and they were up by about hundreds of percent. Well, that was when, I don't know, Bitcoin was maybe 1,000 or 1,200, or I don't know what it was. Now it's 4,000. You said this is an anti-dollar trade. And yet, sure, gold and silver haven't gone up. I mean, gold's up a couple hundred points. Silver's up $1, $1.50, or something like that. But they haven't really taken off yet. So, tell me what's going on with that.
When you say that the precious metals haven't taken off, Greg, do understand that the volumes of paper selling that have been recorded to keep them from going up has risen dramatically.
So I think just this last week there, we had a $20 hit on gold. I'm thinking, what? We have two hurricanes and a $20 down price on gold, and what? What is crazy?
Well, Greg, typically when we see these, I mean, actually, the reality is, in very recent times, in recent days and weeks, the price of gold's been going up. But for every time the price of gold goes up $1, we see something, or we see thousands of contracts being sold short on the COMEX exchange to limit the rise. And so every rise in the price of gold is met with an expansion in the open interest, which means for every willing buyer of gold, there's always a willing seller, and the more the price of gold goes up, the more selling or rise in open interest we see on the exchanges like the COMEX. So buying is being limited, and we know that buying is being limited by people who sell naked short contracts. So this occurs on a regular basis.
And you would be telling people if you're people who buy your newsletter, which is you have a news. I'll put the links up for that. You would tell people that listen, you buy gold, buy silver. Don't be cute. Just go buy yourself some physical metal. For people out there that don't think that they can afford gold, go out. You buy yourself, silver. Is that what you're telling me?
Yeah, I like silver. I like silver more than gold, only from the standpoint I think silver. I think both are going to go up in value in nominal terms, but I think that silver likely goes up more in nominal terms or in percentage terms than gold because silver, I believe, has been suppressed more than gold, and it goes back to basically nature, Greg. For every ounce of silver that is mined, or for every ounce of gold that's mined out of the Earth's crust, 8 ounces of silver get mined out of the Earth's crust, and that would tend to lead one to believe that silver is 8 times more plentiful than gold in nature. But when you look at the price differential between silver and gold, you see an ounce of silver selling for $18-ish, and you see an ounce of gold going for $1,340, and that means that you'd need to sell 75 ounces of silver to buy 1 ounce of gold. Well, the ratio in nature suggests that you should be able to sell 8 ounces of silver to buy 1 ounce of gold, which tells me that one of those two prices is very wrong. Either silver is too cheap or gold is too expensive. And I don't think gold is too expensive because I think it's undervalued too. And that leads me to believe that silver is insanely priced and probably the most underpriced asset on the planet. So I would rather take my chances with silver, especially if I believe, which I do, that there will soon be, and soon's a relative term, but at some point there's going to be some transparency and honesty that's going to be brought to the precious metals markets in terms of pricing. And I think that at the front of the line in creating this change in thinking and this change in pricing is going to be the marriage of blockchain technology with physical metals to bring transparency to the pricing. And that tells me that I think the price of silver could rise on a percentage basis much more than gold, even though both will be going up dramatically.
If you had your crypto world totally in place and it was 5 years into the future and the CME and the COMEX and the LBMA, they're all gone. They're poof. They're gone. They're displaced. What would be the price of silver and what would be the price of gold?
To me, it'd be a fool's errand to try and put a price on it. I would say dramatically higher than what they are today.
Multiples, not just 50% or whatever. I mean, you're talking about multiples higher than today.
I just believe dramatically higher.
Okay. I'll go with that. Listen, you have a new article. It's called "The Cryptos Are Coming." It's on KirbyAnalytics.com. Explain to me. You're going to give some of that away for free, and then the rest of it goes to subscribers.
Yeah, the first third of the article will be posted on my homepage for free, and the balance will be behind the wall for subscribers.
And the title's a bit misleading because it really should say the cryptos are coming, and so is gold, and the dollar's going to get knocked out of the saddle. And that's what the article's about. The dollar's going to get knocked right out of the high horse of the reserve currency status is what this article is about. And you go into examples, excruciating detail and analysis, which is fantastic because I got access to the article. You go all into that very deeply, correct?
Yep. And anyway, Greg. But that's what I believe. But understand, I'm also a person who believes that there's a lot of dark dollars sitting in an exchange stabilization fund, and there's a lot of people who would scoff at that.
Dark dollars.
But that's the kind of work and research I do.
Well, dude, I've never heard the term dark dollars, and all the time I've been, I don't know where you came up with that, but I believe it. You know the truth when you hear it. That's my old saying. And boy, when you said that dark dollars, that's dark bonds, that's dark treasure, that's all kinds of stuff that's out there in the dark. But anyway, dark dollars. Ooh, I like that. You don't know how many's out there. That's scary. That is absolutely frightening for anybody that's holding on to the other dollars. especially if they're digital in a bank account, right?
You're here.
All right. Well, Rob Kirby, KirbyAnalytics.com. I will put the links up. I'll put up a sign-up page. Oh, your page for subscribers. Not that much. What's $145 a year?
Yep.
140. I get nothing, folks. Just to let you know, I never get any kickback from people who I put their links up, their subscribers. I don't ever get a piece of it. I put it up because they spend their time to come on and talk to me, and thus you. And I really appreciate you spending your time, Rob Kirby, coming on and taking us to school on dark dollars and the world's reserve currency and blockchain and how it's going to change how business is done in the world. Rob Kirby, KirbyAnalytics.com. Thank you for joining us today on USAWatchdog.com.
Pleasure being with you, Greg.